The Japanese yen suddenly became more expensive for Singaporeans. In just 5 days, one Singapore dollar went from buying about 126.7 yen to only 122.19 yen. That means the Singapore dollar lost around 3.6% of its buying power against the yen. The change came after the United States and Japan stepped into the currency market on July 30th. They bought yen to support its value and slow its decline. This was the first coordinated intervention by the two countries since 2011. Back then, they acted for the opposite reason. The yen had become too strong following the major earthquake and tsunami in eastern Japan, so they worked to weaken it. This time, Japan was facing a yen that had been falling throughout 2026. On June 30th, the currency reportedly reached a 40-year low against the US dollar. It also fell to its weakest level against the Singapore dollar. There were two important forces behind this. First, Japan depends heavily on imported energy. Higher energy prices linked to the Middle East conflict increased the amount of yen needed to pay for fuel from overseas. Second, Japan's relatively low interest rates made the yen less attractive compared with currencies offering higher returns. Here is where it gets interesting. Currency intervention can create a powerful short-term reaction, but it does not automatically solve the deeper causes of a weak currency. Interest rates, energy costs, investor expectations, and economic growth will still influence where the yen goes next. The amount involved also remains unclear. The United States did not officially disclose how much yen it purchased. However, a Reuters photograph reportedly showed a note in front of U.S. Treasury Secretary Scott Bessent referring to buying between $5 and $10 billion worth of yen. Bessent later said the United States would consider joining further intervention if needed. President Donald Trump described the move as a signal of friendship and said supporting the yen could benefit the world economy. The United States may also gain from a weaker U.S. dollar because American products become more affordable to overseas buyers. For Singaporeans, the immediate effect is easier to understand. A stronger yen makes holidays in Japan more expensive when converted from Singapore dollars. Hotels, meals, train tickets, and shopping may now cost slightly more than they did before the intervention. However, the impact is not completely negative. A stronger yen can reduce Japan's cost of importing fuel and raw materials. That may help ease pressure on Japanese businesses and household prices over time. It could also improve confidence in Japan's financial markets. The bigger question is whether this rise will last. Government action can influence the market, but traders will continue watching Japan's interest rates, energy prices, and any further support from the United States. Do you think the yen will continue strengthening, or will Singaporeans soon get another opportunity to enjoy a cheaper Japan holiday? Share your view below and support 2230 by liking this video, sharing it, and subscribing for more clear news analysis.